last year and a half, 2 years, you've had her as a PA, so you're familiar with her. She's going to be speaking on the developing countries and the luxury markets, which is a broad topic, so we'll see how we focused it. Thank you.
Okay, so I'm going to be talking about, after what was just said, can everyone hear me?
Yes.
Okay. About the luxury markets in developing countries, and I organized it by geographical region. So first, I'm going to start a little bit with talking about Southeast Asia. And currently, it's home to the fastest growing luxury markets in the world, whereas globally from 2012 to 2013, there was only a 6% growth, whereas in Southeast Asia, they showed an 11% growth. And some reasons for this rapid growth could be increase in Chinese tourism, which I'll touch on later, and the wealthy, more educated, and fast-growing young population. And a little bit about the new consumers in Southeast Asia. Their luxury products display social status, and in most Asian cultures, your social status is valued very highly. And it's a bit different than the identities that Americans or Europeans associate with the brand, kind of more like a lifestyle around it versus a status symbol. And the consumers are becoming more selective as time goes on, and they're looking for more unique options, brand options. And now, especially with the emergence of social media and technology, there are so many options out there. And a bit about Indonesia. It's got a very young population. Over half of them are under 30 years old. And their economics and political systems have stabilized. And there's been a really big increase in high net worth individuals. And there's a 4.7% to be exact from 2012 to 2013. And those high net worth individuals have a $120 billion net worth. And again, these younger consumers are tech savvy. They're definitely present on social media, and they're able to gain knowledge about brands, trends, etc. And there has been a shift in consuming habits for this new kind of tech-oriented generation, whereas older consumers, maybe years ago, they preferred more local brands and kind of getting a better price value for their goods. And these younger consumers are kind of following the nouveau riche lifestyle, and they're more willing to purchase expensive, more trendy, kind of new and current products. And that's kind of also because these younger people haven't really lived through the economic downturn like some of the older consumers. And there is a predicted increase in premium luxury shopping centers. There's such a high demand from consumers and increased tourism from China and other neighboring countries. And following a presidential change very recently, last year, consumer confidence is coming back, so people are more willing to spend. And there's rising luxury brand awareness with cheaper and more accessible transportation just throughout the general region. And that, of course, brings in tons of tourists from China who are looking to kind of get away from their more expensive, highly taxed products. And since 2011, just a couple examples of luxury brands that have entered the local retail market in Indonesia are Michael Kors, Hermes, Cartier, Rolex, and Chanel. They're just building more and more stores in these new luxury malls that are popping up. And a couple challenges in the Indonesian market is that the rental space is expensive, maybe not by our standards, but for their local standards, and the operating costs are pretty high. About 40% of funds support salaries and about other 40% for rent, so there really isn't a ton left over for profits. And these costs are basically inhibiting the construction for luxury shopping centers, even though there is a high demand. And even though Indonesian consumers are definitely present in social media, online, as you can see, 70% of 40 million Indonesians use social media, and only 7% of them use online shopping. And they show that there's just a lack about online security and also a lack of customer service. The consumers enjoy going into these luxury retail outlets and getting kind of the full benefit from shopping there versus online where you just click a button and the things arrive at your door. Vietnam is another fast-growing luxury market, and currently their market's worth about $400 million, and their high net worth individuals are forecast to increase by 85% in the next 10 years. The population with reported assets over $30 million is projected to reach over 300 by 2022, so they have pretty big forecasted growth. And also, the number of households with annual disposable income greater than $75,000 was only about 36,000 in 2007 and has more than doubled by 2012. And by the end of this year, it's predicted to reach about 100,000 households with that disposable income, which is quite a bit. So their gross domestic product rate doubled over the past 4 years, so there's a really fast economic and social change. And the lift of movement regulations in 1997 now allows visitors and goods to travel freely throughout the country, where it was more difficult to kind of ship products and get people around to the different cities. And this is also kind of the newest luxury market in Southeast Asia. And this new political view that's kind of brought about the social change, it's all about renewal. With their new political leaders, they've integrated into the international trade system, and they've also joined the World Trade Organization. And again, a young population, and their perception on what luxury means to them has changed. It's starting to shift away from just a price and logo-based value, and now they're starting to seek more sophisticated products, maybe a bit more understated, higher quality. And Ho Chi Minh City and Hanoi are the major players in market development. And there are some challenges as well for Vietnam. They are still coming out from under strict government regulations on advertising and media. So any sort of print or advertising, television, it had to be affiliated with a government-endorsed organization. And that looks like it's recently, they're kind of easing up on that. But they need to still diversify and exploit their media options a bit better. They're lacking a lot of big urban displays like you see when you walk around New York City and Times Square. You see tons of big advertisements. And since it is a new market, the consumers just aren't as knowledgeable. They don't have as good of a brand awareness as a more developed market. And they're just working on building more of a style culture in addition to the shortage in affordable real estate and operating offerings. And Russia is another recently, well, they've kind of taken a downturn in the past few years, but they had a pretty strong luxury market before, and their economic performance does correlate with oil prices, so when they drop, usually their market drops. And after the pretty aggressive Russian action in Crimea, the US and European unions imposed some pretty strict economic sanctions, which dropped the value of their currency and obviously decreased quite a bit of tourism. And Russians basically at this point were looking to unload their weakly valued form of currency, and they did this by purchasing what you qualify as safe investments. So they were basically buying art, luxury cars, real estate, limited collections from designers. Actually, a lot of vintage sales were made, and of course, jewelry, things that hold their value. And there is still an anticipated decrease in the luxury market growth through 2015. And now I'm going to talk a little bit about the more mature luxury markets in Asia. And Japan is the world's second largest after the United States, and they're coming back from a recent recession. The stock market's at a 15-year high, and there's been a 20% increase in luxury goods sales since 2012. Tourism is, of course, a big part of that, and the yen, the Japanese form of currency, has kind of the values dropped, so it's actually cheaper for some consumers to travel to Japan and shop. In 2013, their growth really boomed in the first half, but slowed in the second with this phenomenon called Abenomics. It's kind of put in place by their new leader. And basically this brings higher equity prices, and that increases wealth and consumer spending, also consumer confidence in the economy. So right now Japan is seeing more of like a slow, sustainable growth rather than a rapid growth like some of these newer markets are seeing. A couple issues there is there's been a 3% tax increase in April of last year, and that caused kind of the same pattern that you saw in Russia, where it was like a very rapid increase in spending on luxury goods, but then, of course, it dipped down. And there's still a proposed tax increase for 2015, and economists are kind of fearing a similar fate again, because the last tax increase, the major tax increase in 1997, kind of threw Japan into a bit of a recession. But also luxury good prices continue to rise with inflation, but the wages don't. So we're just kind of seeing some slower growth, kind of staying the same there. And of course, China, fifth largest luxury market in the world. And they do have some growth predicted due to a shift in the evolving market. Again, younger, wealthy generation, they're developing higher levels of sophistication, and they're looking more for quality and exclusivity versus the logo-heavy items that kind of draw attention that most of the newer markets kind of like to look towards because it shows that you have money. And consumers are beginning to value brands with more of a lengthy history. And of course, they're expanding into smaller cities, which kind of opens up the market in different areas around the country. And another thing that's happening with China is they're investing in African infrastructure. Over in Africa, they've seen the second highest increase in the world of high net worth individuals, and the GDP gains. Urbanization and the young population has really brought a boom in spending, and by China investing and improving their infrastructure, it'll provide China with valuable resources, but it'll also grow Africa's luxury market. So that's something that luxury companies are kind of looking into. It's a bit of a risky environment right now. So developments of different methods of transportation will link cities in Africa together, making the trade easier. But in China, they have kind of seen their economy slow down a bit. A 1% decline happened last year, and that's due to a lot of high import duties, consumption taxes, and of course the raised prices of luxury goods. And this promotes shopping overseas. They can travel to anywhere, Japan or especially Vietnam, Indonesia, and purchase goods for potentially a lower price. And the big anti-corruption and anti-extravagance campaign that was put in place by the Chinese president in 2013 bans spending of government funds on luxury gifts. And this is something that's been tough for the market, of course, because gift giving in China is deep-rooted in their history. And it also bans different TV, radio advertisements that promote corporate gift giving. So these sales accounted for almost 25% of luxury goods sales in 2012, so that definitely could be responsible for part of China's slowed economy. And just to link these all together, there are some kind of similar trends that you can see in the emerging markets. You see a really fast growth, it promotes rapid spending, and this is usually kind of started by these technologically young, savvy populations that have just a lot more access to different media, advertisements, trends, new brands. And they are becoming increasingly more conscious of the brands that they're buying. So their tastes are becoming more sophisticated, still a little bit more logo-centric than the more developed markets. But they could use some infrastructure improvements, not really a lot of equity going on. And there needs to be more brand awareness, as well as the boosting in online sales would definitely help to grow the luxury markets there. And if you kind of go to the opposite end of the spectrum to markets that are more mature, like Japan and China, the consumers are more educated in fashion, brand aware, and they just have access to so many different options where they can purchase and the goods they can purchase. And there's less of an interest in logo display and kind of a showing of your wealth. But they have seen a plateau in spending. These are stable purchasing habits that are still forecasted to have a sustainable, just slower growth. And the economic downturns have shown a rapid boom in luxury purchase, followed by a decline that eventually does plateau. So that's, basically the emerging markets can kind of use, they follow trends that the mature markets have already gone through. So you can almost use this as a framework to kind of predict what is going to happen as the markets grow and mature. And sources, and that's about it.